Well, sure enough, oil markets are going to be a little bit of a worry, and the kind of volatility is definitely going to impact our markets. But that said, the Nifty futures are still indicating an upside of about 99 odd points. And to think of it, we've already rallied on the index alone a good 9% from the recent lows. The Nifty Bank has rallied 12.5%. Of course, today we're going to be taking into account the earnings of ICICI Bank and HDFC Bank as well. Look at the Nifty Midcap Index. That's rallied nearly 14% from the recent lows. And the small caps have had the biggest bout of recovery, almost a 15.5% uptick over there. On Friday, of course, we left it off at that 24,350 plus level on Nifty futures. Kunal, in fact, is here in the studios. Let's talk about what the setup ahead is looking like. Kunal, hi, morning. Do you think the markets will shrug off the oil volatility today?
Not really, but I think it'll be a little steadier than what we were maybe in the previous attempts when the markets on the oil jumped by 5%, 7%. So I think in that context, or maybe the gains which were there post our markets closed on Friday, where the Nifty was up, I think 250, 300 plus points, the GIFT 50 in that sense. I think we've just pared down the gains, for ourselves in that aspect. But I think it's going to be a steady market because over the last, I think, 2 or 3 weeks, we're seeing the Nifty trying to show signs of strength. The market breadth has opened up. As you flagged off, the mid caps and the small caps have done phenomenally well. So the concentration for investors, is more towards trying to just about build onto the portfolios back again. The index recovery will slowly and gradually happen. And there will be points where the momentum is very high. And when the market reaches a certain stage, like what we are at current levels, assuming we hit 24,500 mark today, so if we reach those zones of 24,500 mark towards 25,000 mark, there's bound to be a point where the index slows down in terms of the recovery on the upside, and we will try and mimic of what happens across the globe. My expectation is that from here on, we will try and see a lot more stability and maybe less volatile movement on the indices over the next maybe few days.
What's the risk looking like, Kunal? Because at least at this point, it seems that there are certain risks. Would you at all be worried? And if so, on the downside, what are the levels you're looking at?
So I look at it this way, that last week, it was as if that the risks may not be impacting the markets very significantly, or maybe those risks are something which could be sorted out. But now it looks like that in terms of the statements which are coming out, that those risks may not be sorted out very immediately, and it could be a prolonged risk for the markets. And so we are looking at a new normal of crude oil prices. We are not looking at 65, 70, which is there for Brent crude, which was there 2 months back or 2.5 months back. We are looking at 85 to 95, maybe as a new normal for the crude oil prices. This is going to cap the gains for the index and for many of the stocks which are dependent on the crude oil prices as a raw material. So that's going to happen for the markets. And that's why we will probably try and face resistances at every higher levels wherever there is a jump or a spike in crude oil prices.
Good thing, like we were talking about on Friday afternoon, is that in the last 2 trading sessions, the broader markets are making a bigger comeback. And even if you take cognizance from the lows, it's the mid and the small caps which have outperformed at an index level. Should the strategy be more towards mid and small caps when you talk about stock-specific moves as well?
Absolutely, Aisha. So I think that's the way to go in this market, because when you are nearing a point where the index is devoid of push from large cap names, you look at Reliance, look at HDFC Bank, you look at even SBI to a larger extent. These stocks have not participated in the same gusto you would probably have required for the index to move up 10% higher. These stocks give you 5%, 4% returns from their previous swing lows, which means that the additional work has been done by the remaining maybe 40, 45% or 50% of the index. And you can't be too much dependent on those stocks for a prolonged period of time. So that, I believe, could be a concern for the markets in the near term, that with the lack of push from these large cap names, you would have to be over-dependent on these mid-caps and small caps, at least for the time being.
Okay, so what strategies would you propose today?
So I'll suggest a couple of buy calls. OFSS is something which has been doing reasonably well. That stock has confirmed breakouts on multiple time frames, started off with intraday charts, moved on to daily, and now on the weekly charts, where you're seeing good recovery for Oracle Finance. So would suggest a buy with 8,200 as a target, stop loss at 7,750. The second would be a buy on SAIL. Now, this could be interesting because metal stocks are gearing towards the second leg of a breakout. SAIL has been one of the better charts on the medium-term basis. The stock has crossed the triangular pattern breakout about 170 mark. So I'm expecting a further push on the stock price in the near term. 180 as a target, stop loss at 168.
Well, two big